Many investors are interested in cryptocurrencies because of their potential uses and ability to store and grow value. Now, due to their growing popularity, cryptocurrencies have become a global phenomenon that most people know about, but few understand. Hello and welcome to our channel, folks. As a result of the pandemic, many people have ventured into digital investments. In today's world, many investors seek to diversify their portfolios through investment opportunities, and among the available investment opportunities is Bitcoin. This cryptocurrency is widely regarded as a form of long-term storage for value. Thus, it makes sense that many people are interested in investing in this digital currency. Nevertheless, all investments carry risks, so you need to watch this to know the things you should do before you invest in Bitcoin. What is Bitcoin? Getting a sense of what you're getting into is crucial, so let's take a moment to review what Bitcoin actually is. Bitcoin can be difficult to define. It's considered a commodity by some, and for others, it's a digital currency. To put it in a concrete term, Bitcoin is a piece of software, a program designed to allow people to exchange value directly with one another. The cryptocurrency was created by a person calling himself Satoshi Nakamoto in 2008 and launched in 2009. Payments through this system are less expensive than traditional online payment platforms, and unlike government-issued currencies, they are decentralized. Bitcoin is very popular despite not being legalized in most parts of the world and has sparked hundreds of other cryptocurrencies, collectively known as altcoins. Mining is the process of verifying Bitcoin transactions with a massive amount of computing power, and every Bitcoin transaction is recorded in a public ledger called a blockchain. A key quality of Bitcoin's technology is its ability to prevent counterfeiting and hacking. Since its launch in January of 2009, the currency's database has never been hacked. The unique feature of Bitcoin is that it runs across a network of linked but independent computers. Therefore, no single party is in control. Central banks and governments cannot dictate the value of Bitcoin. It is nothing more than a series of digits in a computer program, which means it has no intrinsic value. Only what another person is willing to pay determines the price. What are the investment opportunities in Bitcoin? For those who believe in Bitcoin, there are several investment opportunities, and the complexity of these opportunities can vary. Here are a few of the common ways you can benefit from investing in Bitcoin. Bitcoin mining. Investing in this digital currency is possible by mining it. Mining Bitcoin requires solving complex equations. The currency software adds a new node each time a Bitcoin miner solves a mathematical problem correctly. Nonetheless, mining Bitcoin requires specialized software and skills. The Bitcoin miners verify transactions in the network before adding them to the blockchain or public ledger. Bitcoin trading. Online trading is another way to invest in Bitcoin. It's possible to purchase and sell virtual currencies for profit on the internet using crypto exchanges. The only thing you need to do is link your bank account with a reputable cryptocurrency exchange. After that, you can purchase Bitcoin through the crypto exchange with your bank account's fiat money. As you buy more Bitcoins, you can send them to your digital wallet where you can hold them until their value increases or sell them when the time is right. Payments with Bitcoin. With Bitcoin, it is possible to transact anonymously among any account holders around the world. Consequently, governments are concerned about currency matters. Even though some legislators and officials may not support its use because of its lack of control and illicit connections, some have enacted anti-money laundering and counter-financing of terrorism laws in an attempt to limit its use for these purposes. Several reviews of countries' stances toward Bitcoin and other cryptocurrencies are conducted by the Library of Congress. The report identified 103 countries where governments directed their financial regulatory agencies to develop regulations and priorities for financial institutions regarding cryptocurrencies and their use in anti-money laundering and counter-terrorism financing. In countries where Bitcoin is legal, Bitcoin can be used to pay for goods and services. The sign "Bitcoin accepted here" can be displayed in physical stores. The transactions can be handled using a hardware terminal or wallet address through QR codes and touchscreen apps. Bitcoin can be easily accepted by an online business by adding it to the other online payment options it accepts, such as credit cards, PayPal, etc. In-person Bitcoin purchases. A face-to-face transaction is a good option if you're looking to buy Bitcoin quickly. However, this method can be risky. Take precautions when transacting personally with a stranger selling you their Bitcoins because the transaction involves a lot of money. Along with these Bitcoin investment opportunities, you can also engage in activities involving this virtual currency. One example would be accepting Bitcoin payments at your store. Another option would be investing in Bitcoin companies. Job opportunities in the Bitcoin industry. Other than investing in Bitcoin, it is also possible for self-employed individuals to get paid for Bitcoin-related work. This can be achieved in several ways, such as creating any internet service and adding your Bitcoin wallet address as a payment method. You can also use job boards and websites that are specifically designed for digital currencies. What are the pitfalls of investing in Bitcoin? The risk of buying or trading virtual currency is the same as any other investment. Bitcoin has been attracting investors after its price increased rapidly in recent years. Bitcoin was trading at $7,167.52 on December 31, 2019, and had appreciated 300% to $28,984.98 by June of 2021. The price rose steadily in the first half of 2021, hitting a record of over $68,000 in November 2021. Therefore, many people purchase Bitcoin for investment purposes rather than to use it as a medium of exchange. Due to its digital nature and lack of guaranteed value, its purchase and use comes with several inherent risks. The Securities and Exchange Commission, the Financial Industry Regulatory Authority, the Consumer Financial Protection Bureau, and multiple other agencies have issued investor alerts and what to look out for. Volatility. Volatility is one of the hallmarks of Bitcoin. Truth be told, cryptocurrency is one of the most volatile non-derivative assets in existence. The price of Bitcoin fluctuates by an average of more than 3% every day. Because of its volatility, it endures incredible falls and spikes in value. In other words, you can invest a lot of cash in this virtual currency and lose it all within hours or minutes. Volatility also may make it difficult for long-term investors or those who want to hold Bitcoin as a store of wealth to predict how it will perform in the future. Volatility is viewed by some as a key factor for the growth of Bitcoin, while others believe it is the reason that cryptocurrencies have not disrupted certain industries, such as being a convenient and widely accepted digital currency. Regulation risk. Aside from competing with government currencies, Bitcoin is routinely used for illicit activities such as money laundering, tax evasion, and illegal activities. The government may seek to regulate, restrict, or ban the use and sale of Bitcoins as a result, while other governments are considering other regulations. For instance, in 2015, New York State enacted regulations that required companies that deal with Bitcoin to maintain capital reserves, have a compliance officer, and record customers' identities. Due to the absence of uniform regulations surrounding Bitcoin and other virtual currencies, their longevity, viability, and acceptability are in doubt. Security threats. People who own and use Bitcoin do not usually acquire their tokens from mining operations. Instead, users buy and sell Bitcoin and other digital currencies on popular online platforms. Like any virtual system, Bitcoin exchanges are susceptible to hacks, malware, and operational glitches. Thieves could transfer Bitcoin to another account if they gain access to the hard drive of a Bitcoin owner. It is only possible to prevent this if the Bitcoin is stored on a computer that is not connected to the internet or by using a paper wallet. Hackers may also attack Bitcoin exchanges, gaining access to thousands of accounts and digital wallets containing Bitcoins. One of the notable hacking incidents took place in 2014 when Japan's Mt. Gox Bitcoin exchange was forced to shut down due to thefts worth millions of dollars of Bitcoin. The fact that all Bitcoin transactions are permanent and irreversible renders this situation particularly problematic. It's like working with cash. You can only reverse a Bitcoin transaction if the recipient refunds it. There is no third party or payment processor as with a debit or credit card. Thus, there is no recourse or protection in case of a problem. Virtual currencies are still a relatively new concept, and unlike traditional investments, Bitcoin doesn't have a long-term track record or history of credibility to back them up. Bitcoins are becoming less experimental every day with its increasing popularity. However, all digital currencies are still in the development phase. So that is all the time we have today, folks. I hope you enjoyed this video. If you have questions, feel free to ask them in the comments below, and don't forget to show your support by liking this video and subscribing to our channel to view more of our amazing videos. Oh, and one more thing, do hit that bell icon on your way out to remain updated about all of our future videos. We'll see you next time.